Hi, thanks so much for tuning in. You're watching BQ Prime. This is Stocks in Focus. It's quite a day and quite an end to the week for the equity markets here in India. Quite a pop that you're seeing on the screen. Benchmark indices gaining about 1.3% each. And this is on the back of positive news flow as well as a positive cues from the Asia markets as well as the US markets overnight. But we're here to talk about a basket of stocks or a few stocks that are in focus today. Joining me to talk about those and to give you the analysis is Sunny Agarwal, who is the head of fundamental equity research at Sbicap Securities. Thank you so much, Sunny, for taking the time. Um, let's start with Ramkrishna Forgings and Bharat Forge. Ramkrishna Forgings, the stock that is really doing well in trade today, one of the stocks that is doing well today on account of the Class 8 truck sales data that has come out. And that data suggests that there has been a rebound that was a bit of a question mark for both of these companies, I think, because of signs of a slowdown in the US in particular, and Bharat Forge, of course, going through a transition. What does this tell you in terms of what you've been studying with regard to these two companies? Is it a positive? Would you suggest a fresh entry at this point?
Yeah, thanks, Alex, and good morning to you and all the viewers of BQ Prime. So, coming to the Ramkrishna Forging, so what, as you rightly pointed out, Class 8 truck numbers have been really healthy, and it's definitely positive for Ramkrishna Forging. But having said that, there are few long-term or medium to long-term triggers which will drive the earnings for the company over the next 12 to 18 months. So there are 55-year, 56,000 ton capacity is going on stream by September. So that is going to drive the earning for FY24. And at the same time, so that will be for the second half of FY24, and that it will contribute fully for FY25. So if we listen to the management commentary, the management is very confident that for FY25, company will be able to clock turnover of around 5,000 crore. So, and the current financial year, that is FY23, they may end with a turnover of 2,900 to 3,000 crore. So that's a pretty good jump we can see in earnings over the next 2 years. So although the short-term factors are favorable, medium to long-term are also working for the company. So we are bullish on the Ramkrishna Forging. Anyway, it's the indirect play on India as well as US auto growth story. And at the same time, recently the company has acquired one smaller company known as Suyo, wherein they are diversifying their portfolio and venturing into the various products related to electric vehicles and all those stuff. So all the, factors are playing out for the Ramkrishna Forging, and definitely one can look into adding this stock in his long-term portfolio with an holding period of 12 to 18 months. Yeah.
What about Bharat Forge? Because I spoke to the management not too long back about the third quarter, and it was a bit of a disappointment, but they say that they're in a period of transition because of acquisitions that are made, because of capacity coming on stream, the aluminum business overseas, all those aspects continue to be in play. This is one element of that, Sunny. So how do you see this in the context of everything that is happening at Bharat Forge?
Yeah, so again, Bharat Forge is a diversified story. On one hand, there is an auto story which is definitely playing out in Bharat Forge. On other hand, defense and aerospace story. So recently concluded Aero Show at Bangalore. So management has went on record to say that they have received very good response from a lot of multinational companies, because Bharat Forge can act as one of the leading good supply chain partner for global companies which are looking to set up their base in India for aero or defense projects. So definitely in long term, Bharat Forge again has got a lot of tailwinds which will support their earning growth. So again, we are bullish on Bharat Forge, but having said that, it's the discovered story. So we have seen stock has appreciated significantly over the last few months. So what I would suggest is that one can buy on deep in Bharat Forge with a price target of 900 to 1,000 rupees over the next 12 months. So stock is right now fairly valued. Any dip should be used to add into the portfolio.
Okay. Now, the next basket of stocks, you can't say that there is a specific trigger, but the PSU banks are in focus today. Some have suggested that the slight comfort with regard to the Adani Group raising funds and that comfort that they have in terms of that capital raise, quite significant, is also giving a little relief to the banks and the bank pack because of certain exposure. But if you remove all of that from the picture and you look at the pop today, 3.5% on the index and a few stocks doing really well, how do you look at the stock, the pack, and which according to you stand out? Would you suggest a fresh buy at any of these banks at this point?
Yeah, so you have rightly pointed out that the positive news flow on Adani Group has definitely led to the positive momentum in PSU bank stock. But having said that, after the very handsome rally in calendar year 22 in terms of stock price appreciation in all the PSU banks, the stock went into consolidation mode during the Jan and Feb month. And we have seen that quality businesses like Bank of Baroda, Canara Bank correcting decently from the highs of like Canara Bank went up to 240, then have seen correction at the level of 150, 160. Similarly, Bank of Baroda was trading at around 210 level. We have seen correction around 150, 160 level. So on one hand, there is a comfort, a valuation comfort because still they are trading near to one price to book valuation. So if we see Canara Bank, the 1 year forward price to book is around 0.7, 0.8, whereas Bank of Baroda is trading close to 0.9 and one price to book. So we see a decent, headroom or legroom for a stock price to appreciate from here. And we are recommending our investor, all the investor to invest in Bank of Baroda, Canara Bank, and another small company which we like among the PSUs, Bank of Maharashtra. So the asset quality and the kind of loan book which the Bank of Maharashtra is holding. So they have got one of the highest CASA ratio in the industry. And as we know that the next 12 months is going to be the fight for the deposit, and the bank who is able to garner a low-cost deposit is definitely likely to be emerge winner on the net interest margin front. So Bank of Maharashtra is another pick which we like amongst the PSU bank.
Just one follow-up on that. State Bank of India corrected from its highs, but still not enough for you to suggest a fresh entry?
No, so being a subsidiary of State Bank
of
India,
you can't comment. Sorry, apologies, I forgot about that. Alembic Pharma is the next stock that we speak about, and it is a bit of negative news flow in this one, Sunny. The company will take an impairment charge of 1,150 odd crore on 3 manufacturing facilities that are under construction in Gujarat. That's the update. The 3 plants are expected to take a hit to their profitability and generate less cash than expected on account of US price erosion. And the write-off amount constitutes nearly 25% of the total net worth of the company. A significant negative news, but apart from that very early dip that you saw in the stock, investors seem to be sanguine at this point. What's your reading of this?
Oh yeah, definitely. So if we go back in the history, all these 3 or 4 manufacturing facilities the company has planned prior to the COVID, and now due to the changes in the business dynamic, the value of those plants are definitely lower than the recoverable value, and that is the reason we are seeing that the company is planning to write off that CWIP, and the entry will be passed through P&L as well as balance sheet. So definitely it will hit the balance sheet, the net worth will get eroded. But having said that, why there is no reaction in terms of stock price is that because what we have seen is that during the last 2 post-COVID run-up, all these generic companies are witnessing a pricing pressure in the US market. And the stock was already hammered down since the last 12 to 18 months. And what we believe is that it was kind of underowned by Pharma as a space is underowned. At the same time, all the negative news is already in the price. So maybe the street is waiting for the turnaround signal, and post that we may see up in the stock. So as of now, again, in terms of price, we are neutral as far as Alembic is concerned. But in terms of business opportunity, definitely as a lot of patent goes off and we may see the pharma sector bouncing off in the next 12 to 18 months. It is only a matter of time. We don't know when the pricing power will return for all these pharma companies. Once it is in place, then we may see a good appreciation from this level. Yeah.
So wait and watch is the advice that you're giving?
Yeah, so wait and watch. Definitely, there are many better opportunities in the market as of now. So pharma is definitely a kind of neutral stance for us.
Okay, Natco Pharma is the last stock that we want to discuss today, and this is on account of a buyback announcement, or rather, that the board is going to meet on Wednesday, that is the 8th of March, to consider a proposal for buyback of equity. The stock has seen a pop today. How do you rate the company on the fundamentals, and should existing investors take an opportunity, if possible, to go for a buyback?
See, again, we are not, the details of the buyback will be revealed on the 8th
Sure.
of March, when
Sure.
again buyback, as we all know, the buybacks are of two types. One is a tender buyback and one is an open market buyback. In case the buyback is through open market, so definitely it will be a supportive for the stock price, but for a shareholders, retail shareholder, they may not get an opportunity to tender the share directly at one particular price. So company will keep on buying the share from open market for the next for the said determined window, maybe for the 6 months gradually. So that may support the stock price and may provide some cushion in terms of the downfall. In case the buyback is through a tender route and the buyback price is at significantly higher price as compared to the current market price, then definitely it makes sense to tender this share in the open in the tender route buyback. Let the company reveal more details on the buyback. Having said that, on the fundamental side, again, Natco is one of the story very similar to Alembic, where we have seen not a very good participation in terms of stock rally and all those stuff. But definitely next year look relatively better for Natco. And Natco is again a very strong R&D driven organization. So the product portfolio is very strong as compared to the Alembic or for that other generic player. So Natco is definitely a relatively better play as compared to Alembic. And I will be again recommending that one should, if somebody want to increase the exposure in pharma as a sector, he should use an SIP route for next 3 to 6 months. He can create a basket of 4 to 5 stock, maybe Sun Pharma, Dr. Reddy, Divi's, Natco. So all these are good businesses going through a temporary rough patch. So one can form a basket, do an SIP for next 3 to 6 months, and then reap the benefit whenever the tailwinds are in the favor of the sector. Yeah.
Fantastic. Thank you so much, Sunny, for joining in, and great conversation.
Yeah, thank you.